everyone, it is me, Buffy, and I am back with our weekly Market Insight series, which comes to you directly from our capital markets trading desk right here at SunWest Mortgage Company. There was a lot of news this week, so let's just get started, okay? Markets have fluctuated as high rates and the events in the Middle East have been the focus for traders this week. Stocks wavered as earnings reports continue to roll out on Wall Street, and Federal Reserve Chairman Jerome Powell comments on Thursday that the Fed will proceed carefully with interest rate hikes. Also in a prepared statement, Powell indicated that the U.S. Central Bank is prepared to raise interest rates once again if policymakers continue to see signs of resilient economic growth. Strong economic reports released this week showed that the job market, economic growth, and consumer spending have all held steady despite the Fed's 11 rate hikes, while inflation has steadily slowed over the past year. However, the Fed's latest Beige Book survey of the economy suggests it has weakened since the end of the summer. The U.S. 10-year yield is hovering around the 5% level. U.S. retail sales increased in September by 0.7%, crushing estimates of 0.3%, suggesting strong durable goods demand. The data release also revised last month's figures up from 0.6% to 0.8%. Industrial production also topped estimates, coming in at 0.4% versus the expected 0.3%. Data released on Wednesday showed that housing starts in the United States climbed 7% to 1.36 million annualized rates, which is well below the expected 1.38 million. HMI is a monthly survey that scores home builders' perceptions of single-family home sales and sales expectations for the next 6 months. High mortgage rates have home builder confidence at 40, its lowest point since January, and much lower than the expected 44. The HMI retreated for the third consecutive month, dropping 4 points from the previous month. U.S. existing home sales fell in September to its lowest level since 2010. Sales dropped 2% from August and were down 19% from 2022. High mortgage rates are the root cause of deterrence for prospective buyers and homeowners having no incentives to sell, as they would lose the lower rate in which they are already locked into. This has led to low supply and higher prices. With interest increasing for the sixth consecutive week and the average rate hovering in the high 7%, mortgage applications fell to their lowest level since 1995, decreasing by 6.9% this past week. Purchases went down 6% week over week and declined 5% when compared to the same week a year ago. Refinances decreased 10% from the previous week and were 12% lower than this same period last year. Labor Department data released on Thursday showed that U.S. applications for unemployment dropped to their lowest level since January. Initial jobless claims fell to 198,000 for the week ending October 14th, way below the expected 210,000. Continuing claims went up to 1.73 million, which indicates those receiving benefits may be having problems finding new jobs. All right, not the best news, people, but definitely an earful, and I definitely wanted you to know everything going on. So we made it through. And that is all for this week. Join me next Friday, and I promise to deliver the latest news brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. Please get out and enjoy this beautiful fall weekend. Buffy, out.